Welcome to another stage analysis video. It's Sunday the 12th of November 2023. Lots to get through as always with the weekend video, but going to start off this weekend's video with a look through what the major indexes are doing, as we saw some follow through in some of the larger cap indexes this week. We'll see better strength on Friday after a pullback intra-week. So if we start with the S&P 500 here, you can see we've got the combined percentage of stocks above their 50-day, 150-day and 200-day moving averages at the bottom here, which covers the NYSE and the Nasdaq Composite. So it's roughly 5,000 or so stocks, a little bit more than that. So it gives a good sort of overview of what's going in the market as a whole. So currently just sitting around the 34% level. So a smaller pullback this week than we saw as a whole last week. Last week's move was the biggest the biggest move on a weekly basis that we'd seen in a very long time. It was at least 4 or 5 years plus. So it was a 19% move the previous week. So this week's move, we pulled back around 5%. So it was only around a quarter of the previous week's move, 26% or so to be more precise. But it was obviously a shallower move on the way back than obviously we saw on last week's big surge. So S&P 500 followed through with a small breakout on Friday above the October pivot high there. So we've now had a failed stage 4 breakdown attempt, which has quickly reverted back into the stage 3 range. But note, we are still in the stage 3 range. So there's a few areas of the market where we've seen stage 2 continuations, but obviously lots of stocks are now obviously rebounding within stage 3. So obviously we could still be within a broader distributional structure unless we start to see new 52-week highs and stocks starting to break out convincingly back into stage 2 again. So lots and lots of stage 3 and stage 4 at the moment. If we look at the daily chart of this, you can see the double bottom breakout back below, moved below the 200-day moving average and had that strong move last week, gapping up for multiple days before consolidating this week. So we got that lockout type rally look to the price action this week in the S&P 500. We had those pullbacks intraday, which were quickly absorbed and reverted back higher again, and had that shakeout on Thursday back into the 50-day moving average, which reversed on Friday strongly. So back at the top of the recent downtrend line. So this is the last 3 months or so price action, this channel area through here. So we're back at the top of this channel. So above the 1 ATR level here, which is what we consider a potential short-term uptrend. So at the moment we've had obviously multiple days back above that. So potential change of behavior here is attempting to break higher. Obviously if it starts to revert back down below this recent pivot here, Thursday's pivot low here, then that would be obviously a sign of weakness. So looking for continuation for it to hold above this 50-day moving average here and continue on back towards the upper end of the stage 3 range. Percentage of stocks in the S&P 500 above their 20-day moving average at 66.4% at the moment. So held in the neutral range on the pullback. So good strength the previous week from low to high in the range, and now back into the neutral area and pushing back into the stronger part of the zone. So in a good position in the short term here for the S&P 500. Very similar for the Nasdaq 100, breaking its pivot as well, closing strongly at the end of the week there. So you can see 61% of Nasdaq 100 stocks above their 200-day moving average here on the weekly chart. So in a strong position still. So it did dip into stage 3 again. So we are in stage 3 here, so a ways to go back to the top of the range again. But obviously this recent shakeout, we're now back into the broader structure. So again, we're looking, it's broken above the top of the range, so a little bit stronger than we're seeing in the S&P 500. The S&P 500 is only just currently testing the top of its channel line here, whereas the Nasdaq has pushed above that for multiple days now. Again, above its +1 ATR level in the short term, which is the 1 ATR level from the 21-day moving average there. So in a short-term uptrend, but within this broader stage 3 structure here. Percentage of stocks above their 20-day moving average in Nasdaq 100 at 70% at the moment. So in a strong position currently. Look at the composite, a little bit weaker, didn't have quite as strong a stage 2 run as the Nasdaq 100, but again reverting back from this failed stage 4 breakdown attempt here back into the stage 3 range and making a break above the pivot high on Friday there, but still within this obviously much broader area here. So still stage 3 at the moment, only 24.71% of Nasdaq Composite stocks above their 200-day moving average. So this isn't giving an accurate picture of what's going on under the surface here. But remember, the Nasdaq Composite has a lot of the healthcare type stocks in, the biotechs, etc., and they have been a real drag this year. So they're a big reason why that number is so low there. If we look at the daily chart here, you can see just breaking above that pivot on Friday, back above the 180R level here, so for a week now. So short-term uptrend within that broader stage 3 structure again, only 45.96% above their 20-day moving average at the moment. So in the neutral range after breaking out. So move above the key 30% level here and push up into the middle zone to upper zone is what we use for short-term signals on these in terms of the breadth signals. You want to see this across the board, not just in single charts. So Nasdaq, NYSE, Nasdaq 100, small caps, etc. You want to see them all go at the same time, which we did last week. So this week the pullbacks have been obviously reasonably modest so far, so positive price and breadth action in the near term at the moment, but again still within this broader stage 3 structure at the moment, shaking out of the 200-day recently. So looking to see how this continues to develop here. NYSE much weaker in terms of positionally, it's still underneath its 30-week moving average here. Percentage of stocks at 38.43% above their 200-day moving average. So again, we're below the midpoint there. Still both in stage 4 territory in terms of breadth wise, but obviously the charts tell a different story. We're actually, with this one, NYSE back into the broader stage 1 range after a failed stage 4 breakdown attempt here again. Obviously could go again, but it's back in the middle of the range, which it's been in for the best part of the year now. So since the start of the year, this has been the broad structure with obviously up thrusts and shakeouts at both ends of the range now multiple times. So very much sideways action during 2023 in the NYSE here, which is obviously dominated by the financials, industrials, etc. So we look at the daily chart, see held at its 21-day moving average Thursday, Friday there on the rebound. So we need to see this recover its 50-day moving average and its 200-day moving average, but not yet above its pivot. So different to what we saw with the S&P 500 and Nasdaq 100 and the composite, this is still below its October pivot high and below the moving averages. 55.43% above their 20-day EMA at the moment. So again, in a neutral position in the near term here. Russell 2000 again weaker. This has been the weakest of the major indexes obviously this year since the start of the year. Again, this broad range that it's been in. We had this shakeout here recently back below as it moved back down into stage 4 again, so rebounded. Technically this could still be, if we look at the daily chart, this is still in stage 4. You can see the pivot breaks. We've got the 200-day moving average all the way up here, so breaks below here. There's potentially a stage 4 breakdown area or even the higher level. So take it at the lower level potentially here, but we're still obviously a pullback into the stage 4 breakdown area and rebounding. So could be a spring and a test still. We could form a higher low, could still obviously go higher. That would be a sign of strength, but obviously this is showing more weakness than we've seen in the other indexes. The S&P 500 and Nasdaq's made continuation breakouts, whereas the Russell obviously continued lower, didn't manage to recover that. So obviously relative weakness compared to the large caps still. 52.5% above their 20-day EMA at the moment, while the actual index here is just below its 21-day EMA itself there. So again, small caps underperforming and potentially still in stage 4 here. Look at the VIX, you see the break below the recent pivots, so from October. So in a positive position at the moment. If it starts to break back above that again, obviously that would change. But at the moment, this is in a positive position below its 200-day moving average. Obviously S&P making a break above. We look at the futures.